All right, good morning, everybody. Today is Tuesday, February 17th. We are back doing the live streams. Give me a second here. So market opens in about, do something here. Market opens in about 3 minutes. Let's see. Oh, actually 2 minutes. So for the US for the market open today for US30, it's going to be a buy. 100 points take profit. No, I'm sorry, 100 points stop loss, 200 points take profit. Yesterday's trade hit take profit. Last Friday's got stopped out, but price reversed back up. The previous one ended up being a losing trade. The previous one as well. The previous one was a winner, but we'll review those once price starts. So I have come up with a few new strategies since we last streamed last year, but I'll go over those. So give me a second. Make sure I'm all set. So market opens in about 30 seconds. So just know exactly at 9:30, I'll be taking a buy with 100 point stop loss, 200 points take profit. In about 15 seconds. 26, 36, 758, 59. Okay. And let's see. Second here. Taking up. Let's keep going. All right. So we are running with buys. Right. So there we go. Almost at full TP for 1:2. Real quick. Also here, I will be taking a quick sell scalp. So this is gonna, like the live sessions will be a bit different going forward because I'm taking multiple trades, but I'm looking for a crossover sell here. But I think this has already, so full TP on today's market open. And here I'm looking to take a quick sell scalp for 15 points stop loss, 30 points take profit for 1:2. So this is typically what we used to use to, and look at that push right there. This is typically what we used to use to track our live trades. So let's see if we get a red X. If we get a red X, it is a little tricky. These candles are a bit big. So let's see how this pushes. There we go. I don't know if it's, let's see if we can get that final push down. So we are still pretty bullish. Yeah, so this one did not survive. It's all good. So quick in and out. Unfortunately, this one got taken out, but the market open one hit full TP for a 1:2 risk to reward. And of course, this one we got whipsawed in and out 644. See, 644 somewhere. All right, let's see if we can get anything or something else. So this one, quick take profit on that one. This one was for get history. Okay, so this is another strategy I have here. So if this 15-minute candle closes, again, some of these live sessions, I'll be doing some things pretty quick, but you see this big wick rejection. So we hit take profit. You see where it's rejecting from? It's rejecting from this order blocks, right? And what order blocks are this? These are bearish. So on the close, so the candle that gives you take profit or stop loss for the New York market open with the 100 points take profit. No, I'm sorry, 100 points stop loss, 200 points take profit markup. The candle that hits take profit or stop loss, you ask yourself, did it reject uh did it reject on any order block? So if it rejected against A, and it has to be a rejection, if it rejected against a bearish order block, you would then enter a sell with a 1:3 risk to reward. So 100 points take profit, 300 points. No, I keep mixing it up. 300 points take profit, 100 points stop loss. And those trades, you rarely get them. So if I show you, like, for example, the journal that I use to track that, is this one. I call it liquidity grab. So you can see the win rate for it. It's so far I've taken 17 trades, 7 trades winners, 10 trades have been losers, but I'm going for a 1:3 risk to reward. So if you multiply the 7 by 3, you'll see it's a win ratio of like 21:10. And for that one, you rarely get a trade. So you can see so far for the month of February, I've only had 2 trades, but unfortunately, both of them have been losers. If we go back, you'll see the month of January had 1, 2, 3, 4, 5 trades. And you can see for the month of January, I had a net win of about $6,000. December, December, what was that? December, a net win of, so this is called that 10,000 plus 6,000 minus 5,000. So December was about $11,000 profit. November was 10,000, about $10,000 win, $10,000 profit. So this one, for this particular strategy, I'm comfortable risking 1% per trade because you only get like 5 trades a month or something. So not every day will you get a trade. But for this particular entry here for the market open, you get one trade every single day. So again, during these live sessions, I'll be taking quite a number of strategies or entries. Let's see something here. Yes. So that 15-minute candle will close at 9:45. And we can see that rejection is still happening. And I also take the same trades for gold at 8:30 a.m. So for example, you can see today, this entry on gold pretty much hit. Let's see something. But if this 15-minute candle at 9:45 ends up closing above this, what is this? Above this 15, I think the 15-minute bearish order block is the highest. So if that 15-minute candle ends up closing above it, then no trade. I will be taking no reverse trade. So if at 9:45 it closes above there, I won't be taking the sell. But if it closes below it, I'll be taking the sell immediately at 9:45 because what we are banking on is, again, anytime you see the wicks, you just ask yourself, what are the wicks telling you? Yeah, you ask yourself what are the wicks telling you, and if a wick is rejecting against an order block, then it shows you that they probably were going to grab some sell side or buy side entries at those order blocks. So we have 3 minutes before that happens. When it comes to EMA entries, there really isn't any EMA entry that I see here. Yeah, so we'll just see what happens. I haven't updated this. Yeah, I don't think I updated the December one, so give me a second here. We really did not have any live sessions. 2, 3, 4. And we'll change things up this year um to kind of improve the numbers a little bit because I do have some new things. Okay, so we have about 1 minute. So in 1 minute, I will be taking a sell. So 100 points stop loss, 300 points take profit. The size of this wick is a little too large, but so long as it's rejecting off of this order block, that's fine by me. So I'll be taking a sell exactly at 9:45. So hopefully we don't push back up for the rejection. All right. So I'm in that sell, and I don't know unless I find another chart, but I really don't want to mark it up on the same chart. But this is how my trade setup looks. So this is a post market sell. So that's the trade that I'm looking at right there. So it's typically a bigger move because 300 points on US30 is pretty heavy. We might come back a little bit on this wicks because this wick is a little too large. But we might retest some of those order blocks. But so that's one trade that I am in with one set of my accounts. So of course so for me I have like 28 accounts. So I've separated them up based off of strategy. So I'll just let that ride. And again, this is one of those trades that only happens like 3 or 5 times a month. So we'll see how that goes. All right. So that was a quick takeout. So that one got taken out. Again, that week is a little too large. But so for me, so long as something meets my entry criteria, I end up getting in. So regardless of anything, again, the win rate is still pretty high for it. So that one would have gotten rejected or taken out for that 100 points. And we'll see how price behaves from there. So the only other trade I can look to get in is at this 4-hour SAR that's above here. If price gets to this area, 749. If price gets here, 749.6, 759. 759. That's the other trade I can look at getting in for a sell up here. The other one is this retest of this 30-minute EMA. So if price comes down here, maybe, but we'll see what price will do in between these areas. All right, so in the meantime, what we'll do is, let's see, custom period. Just update some of this journals. So this intraday is pretty, it's pretty profitable as well, because this is the one trade a day for 100-point stop loss, 200 points take profit. December, of course, December, you can see I had a bunch of losses. And that's why I don't like trading in December and January and typically in December and January, I'm typically on holiday, but December was a terrible month for it. But overall, you can see 30, what is this? 71 trades with a 42% win rate. And I think I started journaling this trade or this strategy in November. So between November all the way to February, you can see that's 35,000, about $36,000, risking 1% per trade. So for example, if this was I'm journaling this on a 200K account. So you can see between November and February. So that's only like, what's that? 3 months. So in 3 months, that's about 36,000. So averaging about 10,000 a month for that particular strategy. So that's pretty neat. And you're guaranteed one trade a day. And then you just hold it for a 1:2 risk to reward. So for this one, yesterday's trade hit take profit today. So that's why it shows us 2 days or two trades today. But this one, I typically take a trade every day, depending on whatever direction is given to me. And you can see, of course, US30, we're having that reversal back down to the downside. So one red flag for this one was the wick was a bit too long. So if we redraw the 300-point entry, you can see we just got stopped out, or I just got stopped out for that one, and then price is coming back down. Yes, it might have been better to wait for price to come back and retest that order block. But here's one thing. So for me, when I develop a strategy, I find the entry and that's it. Because if you start looking for other things, then you might miss out on a move. So there's some days where price would have melted down from this area without even coming back down. So there are times when price would have come back down or would have gone down immediately. But today, price chose to retest that top bearish order block and then literally stopped out, and then price is coming back down. So yes, in sometimes maybe it's better to wait for that, but the question is always after you backtest, because for me I backtested all these strategies. I've backtested like at least a year. So more times than not, price will go in the expected direction exactly at that closure of the candle that hit stop loss or take profit. So I'm okay that it hits stop loss because again, I know more times than not, I'll have price going in my direction for most times as opposed to the opposite. We just retested this. I'm going to take a quick buy here. Maybe just a scalp. Let's see where I'm going to take it. Let's wait here. And this is based off of this 30-minute EMA. Um, it's a little too late. Let's see. So the entry would have been on this green. Just a second. Let me see how I want to do this. If price comes back to this area, I would look to enter this 30 EMA bounce if it does choose to come back up. All right. So we are just having that bearish continuation. So never mind. If price had come back up, I would have taken based off of this crossover right here. So it's fine. We'll wait for the next entry if we do get one. So let's just see what else we have down here. Mm. Let's see. Custom period save. All right. Let's update the other journals. So the other one that I like as well is this market open, which is a scalp. I did take that today as well. On market open. So that's the quick 1:3 scalp. This month so far hasn't been the best for it, but today as well was a win for it. I think January as well was a terrible month for it. But this one is a 1:3. This one is since my since the account I'm taking it on is 100K, I have to line it up with the as a 200K manually. It's a 15 second. So this one I've just uploaded here is this one. So remember for the market open, I normally take two entries. There's this one for 100 points stop loss and 200 points take profit. And then there is this one. So you see the chart on my left is a 15-second time frame. So that's the one I just updated right there with the 1:3. So I normally do 20 points stop loss, 60 points take profit. And which is why like on the live session, it's going to be a bit hard for me to call all these trades, especially for this 15-second one, because if I try to focus on both the live session and trying to enter these trades, I'll be missing some of these trades, which is part of the reason why I hadn't done a live session in a minute, because I wanted to be focusing on entering these trades. But just know exactly at market open. Just a second. Exactly at so most of my trades I enter like four separate trades exactly at 9:30. So again, just know exactly at 9:30, which is why I have these charts on my screen. So exactly at 9:30, trade one is this one to my right. I go for 100 points stop loss and 200 points take profit. It's always going to have a buy or sell signal. So exactly at 9:30, you're going to get a buy or sell signal here. So even though I'm not speaking about it, you can look at whatever signal is going to be drawn on the chart, and you can, if you want, you can go ahead and enter those. Because again, if I try to focus on the live session and enter these trades, I'll be missing my own entries, and I really don't want that. The other one is to my left, this chart to my left. This is a 15-second chart. So this one is more of a scalp entry. So I take 20 points stop loss, 60 points take profit. Again, you will see a label for buy or sell. And this one typically happens at like 9:30 with 9:30 a.m. and 15 seconds. So if you see, if I hover over this candle closed at 9:30 and 15 seconds. So the entry is normally at the 15th second of 9:30. So even today, because I was focusing on the live session, I almost missed this trade, so I actually got in later. So that's why, again, even this live sessions, maybe at 9:30, I'll be a little bit more focused on entering these trades as opposed to talking on the live session. But you can see even for yesterday, same thing. There was an entry. When is today? 16th, since this is a 15-second time. So you can see here again, at 9:30 a.m. and 15 seconds, there will be a buy or sell label. So I am taking all these trades, and these two I normally take manually, so which is why I have to focus. The third one I take is based off of these crosses. So it's the first trade, the first cross is entry, but this one I've automated it, so I really don't have to focus too much. But just know that at 9:30, I am looking to enter about 3 different trade setups manually. And for those ones, I have marked them up on the screen. You will get a buy or sell label for them. So this one that's right here on my left, that's the one I just updated on my journal right here. I normally enter it on a 100K account, but since I'm tracking this as a 200K account, because initially I had a 200K account, um, open for it, but then I had to switch to 100K. So that's why if I'm updating the journal, I will just double the quantity, lot size, and the gross P&L and fees by 2, since I'm adjusting it for a 200K account. But you can see for this setup, this as of last year, before December, it was I think I started tracking it in October. So it was very, very profitable. But come December, you expect markets to be on and off. So December wasn't the best performance for it, and January definitely wasn't the best performance for it. But since it's a scalp on market open where you expect a lot of volatility, that's why you're going for a 1:3 risk to reward. So if I filter this based off of the year, and for example, the month of January or February, so you can see in February, there's a lot of losses, right? Let's go back here real quick. Uh, Here there's an opportunity to enter a buy. Let's see if it's a valid one. Yes, it is a valid one. Let's see here. It's based off of this 15-minute SAR that has been formed. 303. 297. Just put an alert there. All right. Let me just put an alert here if price comes back down here. So if we go back here, you see that the month of February, we have how many losses? We have 9 losses. but we have 3 wins. 9 losses, but 3 wins. You can see in the month of February, we had nine, or I've had 9 losses for this particular strategy here, right? This market open scalp. 9 losses, but 3 wins. But since I'm going for a 1:3 risk to reward, as much as I had 9 losing days, it only took 3 winning days to take me back to break even. So you can see, even with these winning days for the month of February, I'm still up like $1,360. So that also, if you look at a month where this strategy performed pretty well, and even let's look at January. So you can see January, if we filter for January 2026, now January 2026 was crazy, right? So I had 17 days were losing. And again, December and January, I really don't like trading in December and January, and especially during this December and January where we had news of wars, economic issues, and all of that. So you can see in the month of January, I had a net losing or net losses of $12,000. So 17 losing days, 4 winning days. But you can see those 4 winning days brought me to like 12, net wins of 12 days, and net losses of 17 days or whatnot. So this one, going for a 1:3 for such a strategy, helps you recover from any losing days. And for example, for this strategy, I recommend like risking 0.5% per trade and not 1% per trade. And this is a strategy that we backtested last year, where I think if you risked 1% per trade, you'd have only blown an account, I think, twice a year or something. But it is very, very profitable in the long run. And if we filter, I don't want to miss this trade setups here if price comes back above. Let's see. Okay, so nothing there. If we again look at the month of December of last year, so December was a net win month of $10,000. You can see 15 losses, 7 wins, but because it's a 1:3, I ended up with 10. So it might look like a lot of red, right, on the screen, but you can see the net return for December is $10,000 because of that 1:3 risk to reward. And then the last one, I think the last time I was tracking it was November, or the first time I started tracking it was November, which I think November was the most profitable month that I did have. Um, This is 38% win rate, 11 losses, 7 wins, and about $20,000 for the month of November. So over time, this strategy is very, very profitable, but you have to enter exactly at 9:30 and 15 seconds. If you delay even by 1 second, you might end up, getting into a loss. So that's that one that I've updated. And then we can update that liquidity grab entry that unfortunately lost today as well. So this is this one for liquidity grab. All right. I'm looking for this entry right here. And this is going to be based on this 15-minute SAR for a sell SAR. But again, as much as it says sell, I'm going to be using it as a buy entry. But unless we get confirmation, that's the only way I will be entering it. So if it does validate, I'll let you guys know when and where I'll be entering it. Okay, so if I get a green X right here, I will be taking a buy for 15-point stop loss. So if I get a green X right there, so if that closes as a green X, and I think it's going to be this one. Let's see. So there goes that green X. It is a counter trend. Yeah, this entries have not been the best this month. Yeah. So that one ended up losing as well. So that's what two. So we've had a win for the market open and two losses for the SAR scalps. So since we've had two losses, I'm not going to take any other scalps for the SARs or EMAs because I think typically we track them with 0.75% risk. So just for you guys, I'm not going to take any other SARs, but then we can observe other potential entries. But just for you guys, I really don't like entering. There's another one that's coming down here. I normally give myself a maximum of 3 in a day, 3 back-to-back losses. But for you guys, I really don't like going past 2 losses. 49, 330. Pretty high. 276, 266. 261. And I'm pretty sure that 300 points would have hit. So fortunately, we got taken out pretty early for this one, 518. Actually, it's on the way there. Mm, mm, mm. So this one is the one from earlier. 15 minutes. All right. So for this liquidity grab one, so this is the one that we entered here, or I entered here for a 1:3 risk to reward. Got stopped out, but you can see price is, came back down. So this one I entered based off of, so again, remember on the candle that hits take profit or stop loss, you ask yourself, is it rejecting on any order block or against any order block? If it is rejecting against any order block, ask yourself, what is the highest or lowest order block it rejected from? So in most cases, if the candle that hits take profit rejects or against an order block, you will be taking an opposite trade than the one you took on market open. So for example, you see today, the market open direction was a buy and it hit take profit, right? And the candle that hit take profit rejected against bearish order blocks. So then you would take a sell, if that makes sense. Now, and in most cases, the candle that hits stop loss and rejects against an order block, most cases you would be taking the same direction as the market open trade. So if today's market open trade hit stop loss and rejected against a bullish order block, then we would have taken a buy, which would have been similar to the market open entry, if that makes sense. But yeah, so for today, this particular one just got stopped out or stop hunted, and then price went in the direction of the one that we had expected against the rejection of the order block. Now, in future, maybe for you guys, for me, I'll always enter on the closure of the candle. But for you guys, if you do see maybe a big weak rejection, maybe you can wait for retracement, maybe 50% of the wick, or maybe you can wait for retracement to the order block that the wick rejected from. But again, remember, it's not going to happen that way every time. So today it might seem that yes, it would have been a better choice to wait for the retest of the order block. But again, I've back tested this for, for a whole year, and more times than not, you won't have that retracement and price will go in the direction that we would be expecting. So just a heads up on that. So this particular one, this is the one I just updated here on the journal. So if we look at all my journals here, so I have like, what is this? I have 15 different accounts that I'm copying from. So actually not 15, 11 different accounts that I'm copying from. So if we kind of filter them based off of the most profitable to the least profitable. So the threshold and the structure. So structure change is this one that we've just taken 2 back-to-back losses today. And I think this one I started journaling it like mid last year or something. I forget how far this one goes. But you can see how in just the strategies I've gone over it, or I've gone over today, the intraday market open, which is this one, which is the one we take one trade a day. You're guaranteed one trade a day, other than, holidays like New Year's. So I normally take even that trade during bank holidays, like yesterday. But the only days I won't take that trade is maybe Christmas. I think the market is only closed like 2 days a year, Christmas and New Year's. So those are the only days I wouldn't take the trade. But other than that, you're guaranteed a trade every single day. So if we look at the ranking, you can see the intraday market open. And this one, again, I started journaling it like last November or something. So you can see it has a 17% return. The second, other than these top two, that we started journaling, or we started trading them like beginning of last year. The other one is the crosses one. So that's the one I've automated. So I'm not really gonna go over that. The market open one, this is the one that's adjacent. That's the one I told you guys I enter at 9:30. and 15 seconds exactly at that point. So that one is pretty, it's actually very, very profitable, but in a time where it has a losing streak. So if we go to that particular journal for the market open and we go to the equity curve for it, you'll see at the height of the equity curve, it had reached $50,000 in profit somewhere. I forget what month this was, but I think it was maybe November. But you can see after November, I had this losing streak here, but now I'm recovering. If you look at this equity curve, so in just 2 months, I think it was October and November of last year, I'd made over 50,000 or close to $50,000. So that's assuming you're risking 1% per trade on a 200K account. So this strategy is, once the market starts recovering and you don't have a lot of, the issue on market open is only if you have a lot of whipsaws. But if you start having directional movements on market open, which typically you have at some point, and you have a win streak, so you can see, like, for example, even when I started journaling it, the market movement here, where you can see this steady growth curve here, that's pretty good. That's what you want, because that builds a buffer for any days that you will have a losing streak. But at the height of it, it was at 50,000 net profit. But you can see I did have a losing streak, but we are now recovering back. But if we go back up there, so I do expect maybe sometime by the half of this year, it's probably going to be one of the most profitable, if not the most profitable strategy. The other one is the next one is the liquidity grab. So the liquidity grab is the one that I just went over today. So it's the one that we took a loss on today. So keep in mind, this particular one, you only get like 4 trades or 5 trades in a month, in a good month. And you're taking a 1:3 risk to reward. So for example, on a 200K account, you're risking $2,000 to make $6,000. So for example, today, if I wouldn't have gotten taken out of this trade and it ended up hitting take profit, that's $6,000. So for example, if we look at the days that it won, if we go to the liquidity grab journal, liquidity grab journal. So unfortunately, for the whole month of February, it's been pure losses. But if, for example, I have a win in the month of February, guess what that win is going to do? That win is going to wipe out all these losses. So it's going to put me back at break even. So that's why, for strategies that either you expect a lot of manipulation or you expect very few trades in a month, you want to go for this high risk to reward, higher risk to rewards. So you can see here, like, for example, when I win, I end up winning like, almost $6,000. About $6,000, about $6,000. Same thing here. When I win about $6,000. Same thing here. So for example, here in the month of November, I only had 3 trades, 2 winners, 1 losers. So that's why in the month of November, I had like a net win of $10,000. So also for this one, I do expect it, like, once we start gathering more trades, I do expect it to be one of the most profitable ones, maybe by, mid this year. And then after the liquidity grab, this is the gold entry. So I do take a gold trade every day at 8:30 a.m. I only started taking this one I think this week. Gold has been a little tricky to find a good strategy for it, but for gold as well. So you can see yesterday was a losing day, but today was a winning day. But because it was a 1:2 risk to reward, I get back the loss from yesterday and something on top. The previous day, winning day, previous day winning day as well, previous day winning day as well, and previous day winning day as well. So gold, I take the market open, but I take it at 8:30 a.m. and not 9:30 a.m. Then the next one is, I do have a intraday market open, but this one is more of technicals. And this one, I did take this one as well today. So the difference is, it's the same strategy with this one, which is why I'm saying, like, at 9:30, mostly I will just be doing my own thing. But it's the technical one is, I look at the 5 minute and the 1 minute charts. And if I do see chop, I do have an account that's taking that. So the account that's taking that is this one. And today it actually ended up being a winner as well. So actually this one should be $8,000 as well. But I look at the 5 minute and 1 minute, and if I do see a trend, and I'm expecting and I'm expecting a buy, and I do see a trend to the upside for a buy, I'll also take that. And that one again is automated. So I've automated that. I don't even look at it. Um, but if I do see some chop, back and forth or ranging in the market, I'm not going to take that trade for an intraday. And again, that one as well is 1:2, 100 point stop loss, 200 point stake profit. I will go over it in detail as we go on, but I don't want to bombard you guys with too much. But that's another one that I started trading beginning of last week. So you can see so far, 5 trades, and actually it should be 6 trades once I upload the journal from today. It should be 6 trades. Um, it should be 6 trades. And let me do that right now. Give me a second. It should be 6 trades. Let's see. Save as report. And we'll just do. Now, for this one, the difference with this one and the one that's guaranteed to have 1 trade a day is that for this one, you're not guaranteed to have one trade a day. I add a confluence of looking for filters. So if before market open, there's chopness in the market, I'm not going to take any trade. Sometimes for the regular one that's guaranteed 1 trade a day, I may take a buy and this account might take a sell, depending on the technicals. Again, and for this year, I'm working on diversifying my accounts and diversifying the strategies. So it gets, and I don't know why. Oh, my bad. This actually messed up because give me a second. I messed this up. Just a second. It should only be 1 trade. Give me a second. I need to filter this out. So duplicated. Give me a second. Great. My God, it's unduplicated. It should be this one. Yeah, it should be this one. Yeah, so for this one, I'll go into detail about it maybe tomorrow. But and I'll let you guys know, like I'll put on the screen if I'm not taking a trade on that account for that particular day. But if we go back here and look at the other journals that I have, there's the gold one, there's this SAR market open. I'll go into detail for these others, but I don't want, it's a little bit too many journals. But beginning tomorrow, maybe I'll be going over 1 journal a day. But for today, that should be it. I really don't see anything else happening. And maybe going forward, we'll probably be using this intraday market open entries to track our trades. We'll see which one is better, because these structure ones that we've been using since last year or for the last 2 years, these 2 months, they haven't been the best, but we'll see how that goes. But yeah, I do like this guaranteed 1 trade a day one, because you just literally have to take that trade with me exactly at 9:30. If it turns up in a loss, you come back the next day. If it turns up in a profit like today, same thing, you come back the next day. And then if you guys want, you can keep taking maybe this other small scalps that I take during the live session, maybe with a smaller risk. But we'll see how that goes on. maybe beginning tomorrow. So I'm still adjusting a few things, but one thing I really want to be cautious about going forward. As much as I may be back doing the live sessions, I really want to focus at that 9:30 a.m. entry, so that I don't miss some of these trades. But other than that, that should be it for today. I will see you guys tomorrow. Have a good rest of your day. All right, guys. Peace.